Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of the OTC Markets, we're very pleased you have joined us for our next live presentation from Novonix Ltd. Before we introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Novonix, please click on the Meetings tab found in the left navigation bar. You'll be able to view the company's availability and submit meeting requests. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Chris Burns, Chief Executive Officer of Novonix Ltd, which trades on OTCQX Best Market under the symbol NVNXF, and on the ASX and NASDAQ under the symbol NVX. Welcome, Chris.
Great. Thank you very much for having me, and thanks everybody for coming out. So I want to take the opportunity over the half hour that we have to introduce some people who are new to the company to what we are doing at Novonix, as well as provide an update on really the exciting space of the battery sector and the evolution of that here in North America. So within the presentation, we'll go through an introduction to the company, and we'll spend time on really the last 2 years of significant progress in moving us forward with a big focus on the advancements within our anode materials team. And one of those notable announcements, also a strategic investment from Phillips 66, and we'll spend time on the significance of that within our market. We'll touch on the battery materials space and the North American electric vehicle and energy storage markets, and then spend time on both our anode materials division, and at the end touch on our cathode materials technologies that are moving to pilot scale within our battery technology solutions group, and then wrap up. But at a high level, Novonix is focused on developing process technology within the supply chain to drive innovation and opportunities for the electric vehicle and energy storage markets. And this has really been able to be leveraged through our battery technology solutions group and the advanced testing technology that we developed in order to evaluate new materials and new process technologies faster. And this has led our anode materials division to be the first company contracted at a gigawatt hour scale to provide domestically sourced synthetic graphite. And that's with Core Power as they build their gigafactory in Arizona. We as a company have really focused on long life technologies that are really critical in today's industry. While we're going to continue to see evolution in battery technology, it's so critical that we advance the supply chain in today's technologies, which are going to remain the present technologies for vehicles and energy storage systems through this decade and beyond. And that's really where we've focused as a company. And it's being underpinned by that growth in the electric vehicle and energy storage markets. So Novonix is a battery materials and technology company. And as I mentioned, we focus on higher performance batteries, materials and technologies, really focusing on longer life and lower cost. And we really see those as coupled because we want to think about the lowest cost of long-term energy storage systems, whether they're in vehicles or on the grid, and increasing the cycle life and the amount of time that a battery is in use is inherently lowering the cost of using that asset, as well as lowering the carbon intensity of producing that asset. And this really ties back to my background. And so I'll spend a minute on my background. I have a PhD in physics. I started in the battery sector in the late 2000s doing my graduate work with Professor Jeff Dawn. And at that time, we really got focused on how long lithium-ion batteries could last. And this was driven because we were transitioning from consumer electronics, such as laptops and cell phones that needed to last only a few years, to electric vehicles and energy storage systems where we were targeting 10 to 20-year cycle lives. And not only was it a challenge to make batteries last that long, but the other challenge was how do you know how long the batteries are going to last and how long does it take to do that work? So we developed technology where we could measure the performance of these batteries when we changed the materials inside them or anything to do with the chemistry and have results within a couple weeks indicating how long those batteries would last. And so this is allowing us to rapidly increase our speed of research and development and commercialization of new technologies, understanding in only a few weeks instead of many months or a year what the implications are on the longevity of the batteries. And so I founded Novonix in 2013 around bringing that equipment and services to the industry. That group has grown into our battery technology solutions group that you see here. And it now has full battery pilot line capabilities. We provide service work across the industry, thousands of test channels, all working on supporting the industry development of new materials, as well as all of our internal programs. As that company was growing, I also took a position with Tesla. I spent 2 years leading a team for Tesla. I was their first technical employee in Canada. And our group had two primary focuses when I was leading it. One was around cell testing work for Model 3 cell selection. And the other was working with our supply chain group to do technical diligence on different materials. And one of the materials we were looking at was graphite, with the question of where was Tesla going to source terawatt hour scales of pure graphite in the 2020s, ideally not from China. And a few things became very clear as I spent time in the space. The first is that synthetic graphite always outperforms natural graphite in terms of the cycle life. And it's really the only anode technology that's proven that can last thousands of cycles and produce the high energy densities required for the electric vehicle and energy storage markets. And here in North America, we had distinct advantages in producing synthetic graphite, including low cost, clean sources of electricity, and domestic access to feedstock materials from folks like Phillips 66, who invested $150 million into Novonix last year and is our largest shareholder. And all of this being underpinned with the idea that cell manufacturing would localize to North America meant that companies needed to focus on developing this technology in North America, and it wasn't happening. So in 2017, I left Tesla and we started our Anode Materials division. It's based in Chattanooga, Tennessee. And over the past 5 years, we've developed and proven out process technology at the lab, pilot, large pilot, mass production pilot, and now are building out our first mass production site that will service Core Power's Gigafactory. And we're a leading company in only a handful of companies even looking to develop these critical supply chains here in North America. So we'll spend the most time later speaking about this division, but it's worth noting that we also continue to utilize our Battery Technology Solutions division to invest in new research and development and new intellectual property generation around the same thematic of how we can develop better process technologies that are going to support the electrification of society. And one we'll speak about toward the end is our cathode material synthesis technology that we've filed patent protection around. And we also have an energy storage partnership with Amera. So when we look at our leadership team, we have a great team based here in North America, including presence at each of our operating divisions, our Novonix Anode Materials, NAM, or Battery Technology Solutions, BTS divisions. Jeff Dawn, where I did my PhD, he's joined as our Chief Scientific Advisor. We also sponsor the work of another professor, Dr. Mark Oberbach, in exchange for intellectual property that comes from his group. We have a very strong board of directors split between Australia and North America, most notably Andrew Liveris, the former chairman and CEO of Dow, John Aglaudria, a representative from Phillips 66, and most recently, after our last AGM, we announced the appointment of Dan Ackerson, the former chairman and CEO of General Motors, and Ron Edmonds, the chief accounting officer at Dow, to join our board. So we're really looking at ways we can leverage adjacent industries that we interact with, such as the automotive sector with Dan's background, or that we're similar to specialty chemicals such as Dow, to bring expertise to our company in a sector here in North America that does not have a historical representation of battery material supply chain. So before we go into the timeline in terms of notable events and dig into our anode materials business, I want to spend 1 minute on our technology solutions group because it's something that's very important and sets us apart. When I spent time at Tesla, it was very interesting to be able to look across the battery materials landscape, which is a very opaque space, and be able to really understand and compare who the industry leaders were. And as I mentioned, our technology solutions group works with customers upstream all the way through active anode and cathode material makers, cell manufacturers, and the OEMs. And it gives us this type of visibility into what the industry benchmarks really are and where the industry trends are going, which ensure that as we develop products and technologies within our core competencies, we really understand that they're going to perform at the level needed to meet customer expectations. And it's really helped accelerate our ability to bring compelling materials to our potential customers. And so this battery technology solutions business really sits at the heart of the company through the hardware that we've developed, our service capability in terms of building and testing batteries, and now working on data analytics with all of the data that we generate. And again, the ability to, for example, work with our anode materials division, which can make the graphite materials. We can provide them to our technology solutions group, build them into commercial style, full format batteries, and test them with our advanced technology and get results in only a few weeks, has really led to our ability to accelerate our process development and product development. And is what gained the interest of folks like Samsung and Sanyo, who we signed initial agreements with back in 2019 and 20, and as well Core Power, who we now have a supply agreement with that will begin in 2024. And we'll look to use that same development ecosystem to advance, for example, our cathode materials technology, which is moving to pilot, and other key strategic initiatives within the company. The last 2 years have been very busy for us and, of course, the industry, and very exciting milestones along the way. Some of these I've already mentioned. For example, at the beginning of last year, Jeff Don joined as our Chief Scientific Advisor. We announced the sponsorship of Mark Oberbach's group for 5 years and our energy storage partnership with Amera. Also, at the beginning of last year, we were selected by the Department of Energy for about a $5 million grant to demonstrate our process technology at mass production scale, which is now being commissioned in Riverside, our first mass production site that we're building out currently. In February, we raised what amounted to about $100 million US. And then in August, Phillips 66 invested $150 million. And we'll speak about them in a second, but they're a very strategic partner across financial support, technology development. As you see, we signed a technology development agreement with them, working on new feedstock materials, as well as supply and operational support. In November of last year, we held an opening at that Riverside facility. The U.S. Secretary of Energy, Jennifer Granholm, attended this event. This was right around the time that the bipartisan infrastructure law was passed, and we really have seen the U.S. government step up and play a role in incentivizing and driving this sector. I mentioned our agreement with Core Power to supply their gigafactory being built in Arizona, and in February, we listed an ADR program here on the NASDAQ. And when we started the company, we focused on, as I mentioned, longer life battery technologies, but also on our graphite materials, how we could make materials in a lower carbon intensity manner. And this summer, we're excited to announce the results of a life cycle assessment conducted by Minviro, showing about a 60% decrease in global warming potential relative to synthetic graphite made in China, and about a 30% decrease relative to natural graphite made in China. So these are critical things as we try to advance and scale this industry in environmentally friendly ways. And in October of this year, we were excited to announce that we were selected for $150 million of grant funding from the Department of Energy towards the build out of our next site. And this was under the bipartisan infrastructure law. So Phillips 66, for those who are not familiar with why this investment is so important, is a global leader in the production of petroleum needle coke. And petroleum needle coke is one of the best feedstock materials to convert to synthetic graphite and make the grades of high performance synthetic graphite needed for vehicles and energy storage systems. And they make these materials in Humber in the UK and in Lake Charles here in Louisiana. And they currently supply any of the battery grade cokes that they produce into the China market because China is really the only processing market for these materials. So as part of their look at energy transition, we hope to be able to localize and reshore the supply of their materials into our facilities to process them for domestic partners. And when we think about our anode materials division, one of the things that has gained so much attention from folks like Samsung, Sanyo, the agreement with Core Power, and the investment from Phillips 66 has always been focused on the performance of materials. And so here we see some performance data in the bottom chart showing typical cycle life testing, an old Tesla cell on here as a benchmark, just to show what good performing cells look like. And the other cells are directly head-to-head comparisons made in our labs. And you can see the significant benefit in moving to synthetic graphite from natural graphite and further benefit in moving to our synthetic graphite. And the top chart shows how with our advanced testing technology, we can make these same decisions in only 10 or 20 cycles. And this is what is allowing us to move quickly as we develop key products and processes. And so in just a minute, as we saw on that last slide, the synthetic graphite materials are really able to enable multi-thousand cycle life technology. And for that reason, they will continue to be the dominant anode technology for this decade and beyond. This is Benchmark Minerals Intelligence data that shows 90% market share still to graphite in the anode space by 2030. That 10% will go to silicon and lithium metal and alternative anodes. And it's worth recognizing that that will still be a large commercial opportunity for those, but it's not going to be the mainstream technology developed and used in the industry. And when we look at what that means for implied graphite demand, on a global basis, it grows quickly to millions of tons per year. But even in North America, we'll need upwards of 1 million tons per year of graphite to satisfy the demand by the end of this decade. And that's really being driven by the investments in the automotive and energy storage sector. So we've seen over 800 gigawatt hours of announced battery plants here in North America, including Core Power that you can see here, 12 gigawatt hours to come online in Arizona. And now, again, we're seeing the government play such a role in incentivizing these companies to source local material. So under the Trump administration, we saw the Section 301 tariffs enacted, 25% tariff on synthetic and natural graphite coming from China. These materials have a waiver on them currently, which is expiring at the end of this month. And now under the Biden administration, we're seeing support in the avenue of funding and lowering the cost of capital for companies to invest here. And so we saw the bipartisan infrastructure law, which we'll talk about in a minute, but we were selected to receive $150 million of funds under. They've recapitalized the loan program office, again, providing lower cost of capital to companies making these strategic investments. And then the big thing that has changed is the IRA, the Inflation Reduction Act, and the ability for companies to qualify for up to $7,500 of federal consumer tax credits toward vehicles which are targeting $30,000 to $40,000 price points. So being eligible for these rebates or credits is critical in gaining market share in the auto space. And these rebates and credits are determined based on the origin of materials and the localization of content. And so it's critical that these companies look to localized and IRA or Inflation Reduction Act compliant suppliers in order to be able to qualify for these and avoid going to foreign entities of concern, namely Russia, China, and others, which can disqualify their ability to achieve and be eligible for these credits. And so that's really important when we look at the graphite landscape, because that is almost completely controlled by China today. And it's going to be one of the most challenging things for these companies to find partners with that have process technology development and are scaling in North America on the timetables of their gigafactories that we saw on the previous slides. Sorry. And so as one of these programs, as I mentioned, under the infrastructure law, there was $7 billion of funding allocated toward the battery materials supply chain. They announced $2.8 billion across 21 recipients in 12 application categories. And we were selected for $150 million. And this will go towards our next facility. There will be a greenfield build that we'll look to bring online by 2025. And so if we think about where the company is targeting production levels to be for our anode materials division, we have our Riverside facility, which we'll see a photo of at the end, that we can scale to about 10,000 tons per year. And that material will go to support our Core Power contract. And now we're shifting a lot of focus into this first greenfield facility, which will bring an incremental 30,000 tons of capacity online by 2025. And then we'll continue to look to increase the output of that site and build another site to go to 150,000 tons of output by the end of the decade. Again, at a time where in North America alone, the demand will be upwards of 1 million tons. And so when we look at the greenfield facility in this plan, this is really where we will have a tier 1 EV focus. This is a rendering of the site that we plan to build that will be capable of supporting 75,000 tons of production output. And the scope of the grant application that we submitted was to build out the site, the infrastructure, and the facility for that full expansion capability and install the first 30,000 tons of production output. And when we look at what that means, about 1,000 tons of graphite is needed to support 1 gigawatt hour of production. So this 30,000 ton output by 2025 will support about 30 gigawatt hours of batteries. And so again, when you look at the announcements being made now, that is kind of the average size of a single gigafactory being announced today. And so the demand on these materials is very high, considering so many companies, as we saw on the map, with timetables for plants to come online in 2024, 5, and 6. And so it's really a big focus of the company over the next 3 to 6 months to be able to secure the site, finalize the work around the site, and break ground on this project, and then potentially also be announcing the partners that will be supplying from this facility. I want to spend a few minutes here before we jump into any questions on our cathode synthesis technology as well, because we view this as another part of the company that has the opportunity to grow to the scale of or larger than our anode materials division over the coming years as well. But it's just slightly earlier, moving to pilot scale now. So when we look at making high nickel cathode materials, or the nickel-based cathode materials that are used in vehicles and energy storage systems today, it's a very complex process, a wet chemical process that requires high grades of sulfate input materials for your metal sources, as well as having multiple waste streams in the process and making the precursor materials. And then those precursors are heated up with lithium to produce the final NMC powders. And we developed process technology that is an all dry process that could have 100% yield in the ability to make these precursor materials and then be able to then subsequently heat them with lithium and make the same grades of final product quality on the NMC side. And we just announced a few weeks ago we had an opening at a new facility within our Battery Technology Solutions group where we're scaling this to pilot scale and the ability to produce a nameplate of 10 tons per year, really to show that this process technology is scalable and further into mass production and prove out the performance and the potential economic or environmental benefits of the technology. And so we've released some information around benchmarking. And again, this is what our technology solutions group does, benchmarks materials against the industry best, showing the performance of our single crystal cathode materials relative to leading commercial single crystal materials, showing very comparable performance as we continue to scale this into the pilot phase. And so over the coming years, this will be an interesting area of growth for the company as well. So at Novonix, our battery technology solutions group is something that's very unique. We have the ability to use this to continue to be a thought leader and an advancer in the development of technologies for vehicles and energy storage batteries. The next few years are going to be critically focused on scaling our anode materials division to meet that huge demand profile in North America, as well as developing and proving out and beginning commercializing our cathode materials technology based on the pilot line that will come online over the next 6 months or so. All of this while continuing to utilize our battery technology solutions division to invest in new intellectual property development to hope to build new parts of the company focused on core technologies that will still continue to support the huge demand that will come through this decade and beyond in the electrification of vehicles and our grid energy systems. And so I'll jump over to the questions here, but you can see our site's 120,000 square foot development site in Chattanooga, and our Riverside site, 400,000 square foot mass production site, and our two sites within our technology solutions group as well. So allow me a moment to look through some of the questions and speak to them. So there's a couple questions in here about production timelines. And so I think I'll try to answer a few of them at once. So our Riverside facility is coming online and starting to commission production lines through 2023 in advance of our core power contract starting in 2024. And we're hoping to announce potentially subsequent customers for that facility. But our production right now will be focused on the contracts that we have and scaling into that core power contract and anything else that we can bring online for 2024, 5, and 6 as we push output from that facility. And that will really drive in terms of there's questions around revenue levels and profitability. We see reaching Riverside output as being profitable for the company. But continuing to need to make significant investments in our continued expansion as we overlap the completion of the build out of Riverside with the start of our new facility build to bring online for 2025. So I am just looking at a couple other things. There's a question here about recycling graphite, and I think that's a great question. Recycling is going to be a critical part of our supply chain moving forward. However, unfortunately, graphite, I think, is a very challenging material to recycle. Not technically speaking, but when you look at the commercial requirements and the supply audit requirements for quality within any of the major cell manufacturers, you have to be able to know the sources of your materials, the processes, all the way to the final output. And when you think about recycling cathode materials or key metals, nickel, lithium, copper, such as this, when you actually recycle those materials, you take them back to their elemental form. You go back to elemental nickel, for example, and resynthesize an NMC material or resynthesize a nickel material to then be used to make NMC. But when you think about graphite, you're not going back to the atomic form of carbon, right? Nor is that how we start. We start with materials such as petroleum coke, and we process and convert them into graphite. If we then start with graphite from a spent cell, well, it depends on whose cell it was. Is it natural or is it synthetic? Is it a blend? Was it designed for high rate or long life? And when you recycle graphite, it's challenging to re-alter those conditions in a controllable way that you can guarantee the product quality. And so when we do look at those demand profiles for materials, when you think about the cathode side, you will start to see recycling feeding part of the demand, but it's going to be challenging for that to be the case on the anode side. And even when you look at the importance of recycling, people are focused on the ideas of second life and recycling. We like to focus as much on the idea of extending the useful life in the applications, which is why synthetic graphite is so critical. And it keeps all of those materials in process longer, again, lowering the total cost of ownership of using these types of battery technologies. So there's a couple questions here about the grant and potential funding. The $150 million that we were selected for under the infrastructure law grant is, of course, a huge milestone for us and a huge recognition of the progress we've made, being seen by the government. They awarded several programs in graphite, lithium, technologies, and its government now has to continue to use programs that they have available in order to protect these investments, right? They're investing $2.8 billion and they'll invest the subsequent roughly $4 based on the budgets. And they're looking to, again, use programs we talked about, the Section 301 tariffs, the use of the Loan Program Office, and other things that we will eventually see come from the US policy to continue to support those types of companies that they see as having the best probability of succeeding and breaking in and reducing that reliance on our foreign supply. So we do hope to see further programs from the government, both around incentives and the competitive landscape, to ensure that the auto OEMs at the end of the day are incentivized to buy local content, which will help drive the value in our products relative to the Chinese-made materials. There's a question here around the cathode materials program and commercialization of that, asking when we would begin the commercial production of cathode materials and where that would be. So with our cathode technology, we have optionality in the commercialization path. With the patent families that we're looking to protect around the process technology, we could look to scale mass production plants the way we are with our anode materials division, or we could also look to partner with existing suppliers in the industry to utilize our process technology in plants that they will build. And so we're still exploring what the best commercialization path for that will be. But I think the critical steps there are over the next 12 months to be proving out the performance of materials on the pilot line and starting to engage in those commercialization discussions in order to understand whether scaling production or licensing will be the best route there. And then we'll look for the most suitable sites across both Canada and the US, the same way we have for our anode materials division. So with that, we only have a few seconds left. And so I think we've gotten to most of the questions, and I'll thank everybody for coming out today and look